What is up, everybody? Good afternoon, and welcome to Monday, April 21st, 2025. Coming at you today with trading trends. Crazy episode, considering how the market went down today, down about 2.5% in the S&P. Gold hitting a new all-time high. Utilities got slaughtered today, along with natural gas and bonds. Really a focus here with rates ripping, the dollar hitting 52-week low. Say what you will, but the tariff threats and along with Trump threatening to get rid of Powell and stuff like that is really not instilling confidence worldwide with investors. So the dollar hitting 52-week lows, S&P looks like it's headed towards more downside here. Not very confident instilling here. Folks are flocking to Mexico, flocking to India, other nations. So something to be aware of where S&P is not. We've been saying it is not the only game in town, far from it. So let us share the doc and get into it today. There were quite some movers, and I'm talking to the downside, but there were some to the upside, and I'm talking about gold. We've been talking about it. So here's the chart. It looks like almost like a Kareem Abdul-Jabbar kind of thing here, but the utilities got slaughtered, and then gold hitting all-time highs. I guess that's what this guy is reaching to the heavens with it. So natural gas, we'll take a look at that. That really slid today. Utilities and bonds sell off aggressively along with the S&P, while gold hits a new all-time high. All right, so a little preview of what's to come here. So to the up moves, gold in India. Again, gold hitting a new all-time high, up 3% today. So strong thrust higher here. Overbought, sure, but a lot of momentum with this one, and green skies ahead. You had the GDXJ as well, the miners hitting new 52-week highs. So a lot of people are flocking into the space. India up 2%. We'll see how that looks. A longer-term chart. The nat gas got hammered today, down 6%. These are all multiple sigma or multiple standard deviation moves. Utilities down 2.5%, and bonds, a long-term strip, down nearly 2%. A massive move in bonds. We'll take a look at that chart. A lot of folks look at the TLT, and then we'll look at the winners and losers from the week. So without further ado, let's first take a look at, that's me. Hello, I hope everyone had a great Easter. He is risen. Hallelujah, he's risen indeed. And that same thing today. Like seeing the church was absolutely packed yesterday. I wish it was like that all the time. It was pretty great. Let me share the screen here. All right, so here we go. Real fast, we'll look at the single stock movers. We've been talking about NVIDIA. It looks like crap. Down 4.5% today. Awful stock. Yes, it's up 26% year over year from last April through today, but it's been, a lot of volatility. NVIDIA, almost like Bitcoin, you get paid in volatility. But right here, year to date, it's down 28%. So you really have to be careful. We're going to look at the SMH later, too. That looks like absolute crap. Tesla really was what did the consumer discretionary sector in today, down 6%. Tesla looks awful. And, of course, coupled with it, as it's the makes up XLY, is Amazon. Amazon down 3%. That stock looks like crap. Now down on the year. It's down 24%. And it's down 5% on a one-year look back. So that's not the place to be. We looked at the Qs, or we're going to look at the Qs right here, down 2.5%. Netflix, we were talking about it on Friday, or on Thursday night, rather, when they reported earnings. And it was very strong, a big beat. Unfortunately, when the tape is down this hard, when you got the Qs and the mega caps down 2.5%, it's hard to really get a nice rally and hold it. So closed up 1.5% in a brutal tape. Palantir down 3%, but still holding a 90 handle. Gold will, of course, focus on one of the best looking assets, if not the best we were looking at. It's just up 3% today. This monster's up 30% year to date and up 43% year over year. So just staggering. Meta down 3%. This one's glimmer has faded. Apple down 2%. MicroStrategy's flat. Bitcoin, we were talking about it. We said it was going to have a nice rally. It did today for the most part. IBIT right here up 3%. I believe Bitcoin itself is up to 87K. It looks decent again with all the deleveraging that's been going on. I know Tom Lee was speaking about this from Front Strat this morning as they rang the opening bell. Good guy, Tom Lee. Was talking about digital gold, Bitcoin catching up to gold. We'll say gold is ripping all-time highs, and that's really more of the fear trade. And of course, the currency that's been going on. FXY had a major move today as the dollar hit 52-week lows. So a lot of confidence leaving the system. Money doesn't just disappear and evaporate. It goes to other markets, and we'll take a look at where. Right now, it's going into gold and hard. United Healthcare, this continues to get slaughtered, down 6%. They guided down I don't know if they're writing off, catastrophe bonds or what, but they are getting absolutely slaughtered. United Healthcare down 6%, Microsoft down 2%, looks awful. And that's about it. IWM down 2% and Google down 2%. So not good looking stuff over there. On the intraday chart here, so really it just continued. We opened here at 521, and we just continue to go lower and lower and lower. I think there was ratcheting comments from Trump saying that interest rates have to come down right now, and he was going to threaten to get Powell out. And that's not very confidence instilling, as we said before. And Powell himself said, we're not. There's no Fed put, and Trump can't get rid of me. So a little bit of a clash there, not so good. We did bottom here at 2:00. At 508, and then if you see here towards the end of the day, I don't really know how much you make of this, but VWAP is at 513. We actually closed above VWAP by a hair, up 513.5 is where we closed. So a nice little bit of buying at 3:30 p.m. I will give you that, but really it was pretty ugly move today. Volatility was up 6% after we saw it swoon last week. But yeah, the S&P down 2.5% today to close at 513.5. As I zoom out here and we go on a 1-year view here, so this is where we are. Again, don't forget the 52-week low, which we visited on the 7th, exactly 2 weeks ago, is at 482. Here we are at 513. We were talking about last week the bullish accumulation phase. We were looking for it to end. Let me look at my calculus here. I have it right around the 24th or so. It looks like we may have ended a little bit early with monster resistance at the 21-day exponential moving average, also coupled with it's actually equal figure of the 50-day moving average, and that's right around 542. Monster resistance there. If you could see here, we came up for just a hair here on the 14th. It got to 544, and look at that, quick 30 points down all the way to 513 here. Looks pretty ugly here. Again, I don't like the us under a sliding lower 200-day moving average. I know the S&P has averaged, gargantuan, of course, 10% throughout history, and then more recently, it's the monster jumbo numbers, 15, 20, 25%, depending on the look back in recent history. But this holds no matter the market. This is a sell the rip environment. This is not a buy the dip environment until further notice. And again, we have not held an above 50 RSI since February 20th. That is very meaningful to me. That's just saying it's like even money. It's like, now, you know what, I'll pass. I'll go buy something else. There hasn't been conviction to buy in this market since the week of all-time highs, the third week of Feb. So S&P still not the place to be. And if that's not the place to be, then your mags aren't the place to be. And of course, with the way, heavy concentrated index that the S&P is, you're going to want to avoid the mags and Microsoft, Apple, Amazon, Google, and so on. So in terms of where the bottom is, I mean, this could easily get down to 500. Again, that's 13 points from here. This reminds me similarly of when I signed off before baby arrived. I said, this is not going to be the place to be for the next 2 weeks. And then we had a floor on the market. It's kind of what I'm seeing right here in the charts. To be very frank with you, the rally I have started around here at this 493. And then we had to 545. That was a monster rally. The problem is it was good for about 5 days. I expected to be on that 15-day cycle. So this is almost like, again, offense to fat people. My son is fat now, so I can, it's 3 weeks, but he's kind of a hypho. This is kind of like you really thought you were going to really impress yourself on the treadmill, and you thought you were going to go 5, 10, 15 minutes at a high altitude and speed, and you couldn't do it. You did it for 2 minutes. You gut check time, you're weakling, and it didn't work. Not this time. That's what happened with the S&P rally. I don't like the candle today. For me, right here, I think we can easily. I would avoid the S&P over the next 2 weeks. I don't think it's a good spot to be. There's also couples with the sell in May and go away. Just not good stuff in the S&P. Your 401k watchers, I don't think you are going to have a good time checking your account balance for the next couple of weeks, unfortunately. Right here, in terms of the volatility and Bollinger Band, volatility expansion in the Bollinger Band here, I have two different lookbacks, or two different, time frames here. I have 495 for one, and then the other right around 500. I think this is in the cards essentially for us to visit this in the next 2 to 3 weeks. So that's essentially another 15 points or so. So another 3% to the downside. It'll likely hurt. But whether or not this holds at 480, I think it should. And buyers should step in should we go under 490. But this is in the card. So I would expect ugly market movements over the next 2 to 3 weeks. Unfortunately, I don't think the rhetoric from Trump is helping. And if any of these companies, again, like you said, saw in the case of Netflix, even if they crush it, it's going to be hard to sustain a move and sustain a rally with the overall overhang here of the market. So, Rock, you got something to say? No, he just farted. So that's about it. Again, S&P still, yes, it was oversold for a bit today on the intraday time frame. And again, we last were oversold April 8th, and we're still trying to just get that off. We're at a 38 RSI. So again, just not confidence instilling and monster resistance, as I said, at 540. A lot of dead bodies there. It's not a strong market here. All right. Well, speaking of things that are strong today, we got to look at the granddaddy of them all, a new all-time high. Congratulations if you're holding gold. One of the absolute best charts of the market. This thing put in its low last May at 211. And now is trading to 316, Austin 316. Who's at WrestleMania this weekend? This is just absolutely, look at the breakaway here. So this is the 50-day moving average, 290 here. And we surpassed above that just April 10th. So again, overbought again. This is something you'd love to see in the S&P. But gold was overbought. This is when it really started going in September in terms of registering its first overbought condition. And again in October. And then it did it. Then it was okay, still rising, but no real euphoria type parabolic moves until February, where it was overbought for much of the month. And then now we're getting similarly those conditions. So March it happened, and April, and now we're at a 78 RSI. So typically you don't want to chase a 78 RSI, but you are flooring it on the gas. So this thing is going high. We were speaking more so of GDXJ and GDX last week, saying, wait for an entry, but this definitely can keep going. To me, full target right here on gold is around to be very honest with you, about 300. I liked it about 3 days ago at full target, and yet, of course, it continues to zoom up $15. Can this go down? Absolutely. However, if the market and the flows in this have been absolutely extraordinary in gold. This is worldwide flows. It's for such persistent rally like this all year long compared to the other indices, other assets that we see. Just strong flows absolutely globally. And of course, with the dollar hitting 52-week lows and rates ripping today, gold continues to be the place to be. I think gold, again, is all-time highs today. The S&P would not be the place to be, in my opinion, for the next 2 to 3 weeks. On up days in the S&P, I don't think you're going to get a ton of them. You can potentially expect this to slide, and that would be your entry. I think a very good entry would be around 290 on this with a target of around 300. So more so tactical trading. Be careful with it. In terms of call spreads, this looks like it continues to perform. Be careful of selling upside, 320 calls or something like that, because this can rip your face off. The chart also looks, in terms of today, it closed just $1 or just 50, 60 cents off of the all-time high. So this is just continues to have buyers. April 8th really was the last time this had a swoon down to 276, and it's just been up and away. So that's gold. A great entry would be 290. I would wait like 2-3 weeks if you have no position in this and you want to get a solid entry. 290, your 21-day exponential. Also, there's similar marks in a lot of the charts here where the 21-day exponential equals the 50-day simple. 50-day simple, for you that don't know, is you just average the last 50 numbers equally, whereas the 21-day exponential moving average places more weight on the more recent days. So with this up and away, 290 to me looks like a great entry. I think you get in the next 2 to 3 weeks if you are patient. This looks overdone here, but it's happened multiple times before. And then the only other gainer of the day in a multiple sigma manner was India. They continue to flock into this one. We were talking about it last week. It had a big week. This is now trying to get to its upper Bollinger Band, trying to really do the hard work. This almost reminds me of the S&P. You see it curling or rolling over 200-day moving average. And India is really trying to do the hard work here to hold a rally. India today up 2%, which last I checked was up also last week. I think this has a little bit more to go till it gets to about 45. We said this also in the video last week, about 45 quarter. So I think it has a little bit more, but again, trees don't grow to the sky. This thing has rallied from 41 to 45, essentially 10%. And India, is not the most excuse me, is not the most volatile of assets of nation ETFs. So it's about a 73 cent average true range on a $45 stock. It's picking up some volatility, but I expect this to go a little bit more and then a bit of a decline to 43. Oh, I will not forget. Oh yeah, if you have a ticker or anything like that, put in the chart, put in the chat. I will take a look. Don't forget Nat Gas. Yeah, Nat Gas is the big loser on the day, Tony. I will get to it. It's next, actually. So in terms of India, I think this has a little bit more to go. I think it wants to get that 45 handle, 45 quarter before it has a little bit of a decline to 43 bucks. All right. Now, I'm not going to make you wait till the end because it's first on my list right here. The biggest loser today in a multiple sigma manner and in a percentage basis, down 6%, natural gas. So this is really important. I'm glad you asked this, Tony. I was going to cover it anyway. So down 6% nat gas. Let's take a look. Let's zoom out first. So this has not looked well since April 3rd. If you want to put your what your position is, Tony, it could be of help as well. So the 200-day moving average is 1628. We closed below it here at 1606. Nat gas has not closed beneath its 200-day moving average since Christmas week. So a bit of a trend change here, something we haven't seen in about 4-ish months. I think, and we said this also last week, I said this is going to, I believe, find a base this week. Nat gas is volatile, so it takes more time than the average bear. There's a joke there somewhere about bears and bulls. I'm tired. There's 2 kids at the house, man. Give me a break. I said this is going to try and base around the 17 handle, high 16s, low 17s, more so high 17. I thought it was going to form a base right at 17 even, to be honest with you. And we lost exactly that. Today it was down $1. So we went from 1707 to 1606, and now we're under the 200-day moving average. This is very interesting to me. I think it's worth buying, but you have to be super careful. I would have a stop in and a tight stop at that down to, I would say, let me look here. The lows of fall. I would have a stop here around 15.5, okay, which is, 55 cents away or about 3% away. I think it bases here, and I do think it has a decent couple of weeks. Just try to find something uncorrelated to the S&P. Again, I don't think the S&P is going to be the place to be for the next 2 to 3 weeks. So you're going to want to find uncorrelated trades. And that gas, up until recently, had been one of the leaders when the S&P was taking a poo. So I like nat gas, but we have a tight stop on that. And I think it does rally to about 19 even. So it could be a huge gainer. The candle is ugly here. Again, utilities got absolutely smoked today. So this was in its face. Potential trades would be, you can check the option channel on this as well, because UNG options can be very cheap, but you can check out the 16.5. You really have to look. I don't have the option chain in front of me on this one, but you could do the 17-19 calls. You could do a 17-19 1x2, but I think the buck is going to stop there at 19. This has just fallen very quickly. This chart still looks better than the S&P. This has had above 50 RSI largely just up until April 3rd, and then it fell out of bed. So, Tony, I don't think you put in your strat or what your open trade is, but that's what I would recommend on here. I think this holds. It can wiggle a little bit. Again, not to pick on fat people, but this could be the fat person on the trampoline. It could sink a little bit and then rally. So I want to see this. However, if we get 1 week, or I'll just call it that, 1 week to 10 days of closes below 1628 in UNG, I don't like it any longer. And then I feel like 52-week lows are going to be coming, and then you're looking at 12, 13 handle in UNG. So be very careful, and hence why I'm talking about having that tight stop of 15.5. If that breaks, this isn't really the place to be. And that's really giving a crazy volatile asset a tight leash. Typically, you want to give crazy volatile assets a bigger leash, but this, with a market where it is, you want to be careful. Okay, there he is. He said, I'm short nat gas. So this is a critical point. So same thing for you in terms of just so vice versa. I don't know if you have an option or a derivatives trade, or you're just straight short UNG. That's a heck of a collection. I don't know where you were short since March of 24 to 16. That's a massive downfall here. I don't think this continues to just absolutely plummet. But again, I don't want to sound like I'm contradicting myself. if we break and we close below 1630 for a week or so, if this happens by Friday or so when we're under, we have the 16, anything sub 1630. I don't like that. You're going to start to see this 200-day moving average, which is now just staunch, just flat, 1628. It just started to going down actually last week, 1629, 1628. So it's declining, albeit very, very small. You're going to start to see that start to curl lower, and similar to the S&P, you're going to go from a buy the dip to a sell the rip environment, and that's what makes me want to leave this chart. So right now, I'd almost rather put a long position, but the market just overall sucks. But I do want to look for those uncorrelated trades versus S&P. This viewer here, Tony from Italia, is short. Just be careful. You're into a key level here. I don't know what level you're short at, but I'd be careful because, again, trees don't go to the sky and things don't fall through absolutely through the basement either. And this went through from 20 to 16 in just 2 weeks. So be careful. Like I said, I expect us to base this week. I thought it was going to be around 17, and now we're at 16. I still maybe a little bit of this move. I expect something like this, a zig and a zag. Maybe we go like that and then go higher. And then before you know it, you're at 17. So be careful with your position, in my opinion. Those are the levels I would look for. Woo. Okay. XLU got hammered today. When we look at natural gas, when we look at utilities here, 2.5% is a big move for utility. That is a multiple standard deviation move. This is also having a character change. We were looking at this last week, an ugly candle here. The 200-day moving average is rising. It's at 77.26. We are below that here. Utilities, ever since that April 4th collapse, is really, really just not been the place to be. It's having a hard time. Let's just put it there. I think this has a little bit more upside in the next week. I think this wants to get to like $78. You got to be really, really cautious with your upside targets on things in a market like this, where people sell first and ask questions later, regardless of the asset and its correlations and its what it's tracked to the indices and every Truth Social tweet, Truth Social post, or whatever it is. But this, I think, would be a place of that folks would cling to defensively. And I think this has maybe a few more days. This is a monster move today, but I do think it reclaims its 200-day moving average, but not with a ton of gusto. I think it gets to about the 78. I think these wicks still prove to be resistant, and then overall monster resistance at $80 here. That is just again, we haven't pierced above 80.5 in utilities since December 5th. So while it does have a rising 200-day moving average, and your support's at 77.26, we dipped underneath that today. I think it has a couple of good days, and it reclaims that 200-day moving average. So if you're long utilities, tough one today, but I do think it is still not a bad place to be. And then got to look at this one. Bonds got absolutely hammered today. They sold it in the U.S. They bought it international. You'll notice if you look at in the weeds like I do, the bond ETFs and some of the crazy, more esoteric international bond ones, they got bid up today massively, meaning international bonds up, yields lower internationally, dollar hitting 52-week low. U.S. bonds smoked lower, rates higher. So the 52-week low for bonds, I'm speaking through the asset that is the long-term Vanguard bond, hit a low on January 14th of 54 in an ugly move today, down 1.5% or 1 2/3% here, down to 54.70. The 200 moving average, pretty much a flat line, starting to descend here though, and it's at 58, so way, way above from where we are today. What is the picture, in the near term? So this does not look good. I expect this one to base around this 54.5 handle right around here, and I do expect a nasty, just a not great week. I expect it to base, which is always difficult. It's kind of like finding your natural rhythm on the treadmill. Where is your stasis, really? So I expect this to base right around that 54.5 to 55 level, and a potential rally as high as 56.5 or 56.30 to 56.5. And that is going to be as good as it gets. So again, in the near term, a call for a rally, a weak one, in bonds, which means a decline in rates. I don't think it's going to do a ton to the market overall in terms of, encouraging beta trades, just because of the overall backdrop of the S&P. But bonds absolutely hammered today. Just an ugly move, especially since just April 4th. That's a monster move for bonds from 59 to 54. And again, a sliding 200-day moving average. Another place to be. Rates are going higher longer term. Okay. Now, top three gainers. Again, if you have a ticker or something, put them in there. I'll take a look. Top three gainers of the past 5 days. Again, you got to look at when you look at your dollar exposure. EWW, Mexico is down today, down 1%, but this is the best gainer over the past week, up 7% is Mexico. So a little bit more than 1% a day. I think this is reaching its peak here in the near term. I expect this just on volatility. It may have already done it. This 55 is really difficult for it to breach just because of volatility and potential FOMO. Maybe this gets as high as 55.75. So where my cursor is here, but I'm not sure it has quite that much to go. That would take you back. The 200-day moving average is still going lower, and this is kind of what we would love to see in the S&P. Mexico now has had its third close above the 200-day moving average, which is at 52.5. Wonderful. The problem to me, I believe, is this is going to go lower in the next 2 weeks to about 52. So where my cursor is, and then it's going to have really a war to wage here with the 200-day moving average. It's going to be above it, below it, but I really feel like this is forming a base, and there is just an exit out of the U.S. and trying to get into other countries, and you're seeing that with the EUFN, European financials. Not today, on my radar, but that was hitting highs recently. Mexico looks good, in the time being. Looks like it's forming a base and has relatively strong flows and good relative strength versus the S&P since March 1st. So there are worse places that you can be in. The best place to be, and I'm not talking about 2x ETFs, 3x ETFs, any of that nonsense, 3x Ether inverse crap. This is real markets here. Mexico, best place to be in the past week, up 7%. The second best place to be in the past week, and I'm not going to kick a dead horse here, but gold up 6%. The gold miner juniors are up a tad more than this, but here's the GLD. I'm not going to, really go in on this again because we opened the show with this, but gold, the second best place to be, up 6%. Okay. And then India is the third best place to be. So understand the correlations of those markets to your, your Apples, your Microsofts, even your MicroStrategies. It's nil. Okay. EWW has got your Walmex, gold. That's its own thing, obviously, with the shiny metal. And then India, which has its own companies, consulting, some banking, HDFC, etc. So here is India. We looked at EPI earlier, had a big day, up 2%. This was up 1.4. They have different constituents, obviously. India is going through something right here. This was a big week it's had. And I think, to me, full target for this is right around 53 quarter. And again, a heavy 200-day moving average. I don't think it makes it that high up. So I think it has a couple, maybe another day or two of positive market movement. But again, India's not the most volatile country. This thing has rallied from 49 to 53. I expect maybe a little bit higher of a move to about 53 quarter or so, and then a decline to about 51 as it tries to, etch away higher here. But again, there's worse places that you can be in India since March 17th, honestly, with relative strength versus the S&P. All right. So those are the best three gainers of the past 5 days. If you're long in Mexico, gold, and India, congrats. You're absolutely crushing it. Just avoid S&P exposure for right now. I think that holds for the next 2 to 3 weeks. And if it is so, and you don't chase these, whoops, let me move that box. And if you chase these, or if you don't chase these and you get in appropriate levels, Mexico, gold, and India, considering what it's done in the past week, could have more upside if you are careful. Okay. Top 3 losers of the past 5 days. You got to look at these. We already did this, but Nat Gas, the worst loser in the market. Okay. Down 14%. And that's why when I was talking to Tony, be very careful with this, have a tight stop, etc. This thing's down 14% in the past 5 days for an average of almost 3% a day. Today, down 6 or 2x. Be careful. Want to see where this one opens. It's not oversold, and it hasn't been, ironically, since July. So that's interesting to me. But again, the first close under the 200-day moving average since Christmas week. So, Spidey senses should be tingling there. Doesn't look extremely strong, of course, but I think it could be worth a shot. I do like that it's not correlated as well to like obviously the S&P, and where ideas are sure to come by from the long side that are not correlated to major market beta, right? So this I feel like could be worth the punt with a tight stop. But UNG, the worst place to be in the past week, the worst, down 14%. Next, MAGs. The MAG 7 down 9% or nearly almost 2% a day. Today, an ugly one down 3 1/3% was the MAG 7. Of course, when you look at Tesla down 6 and all that, and the Q's down 2.5, and Nvidia doing what it's doing, this wasn't going to look good. So this is part of my thesis of why the S&P is not going to be the place to be for the next 2 weeks. I think this group looks ugly for the next 2 weeks. Potentially in earnings, can save it, but it's going to be difficult. I think this is headed to about $40 to $39 handle over the next 2 weeks. I think there are more sellers. I think this revisits its oversold condition within the next 2 weeks, and that takes you to. I think it's totally feasible that we either break those lows or get inside this bar from April 7th. So really, my downside here for this is about 39.5, but I would not be shocked if it goes lower here. So 39.5 is basically, like I said, right inside the April 7th low, as well as the Yen-Mageddon low. So if that breaks and we go south of 38.65, yikes. And the way the backdrop of the S&P looks, that would not shock me. So again, the MAG 7, this was just on loop trade for 2023, 24. It was just buy the MAG 7, buy the MAG 7. It was almost too easy. Right now, this is not the place to be, and the 200-day moving average is going south as well. Pronounced that is a sell the rip, not a buy the dip environment. And then lastly, very correlated to this is the SMH. SMH down 7.5% in the past 5 days. Coming again, a clear peak last summer. A clear peak on 7-Eleven last year at 283. And we're talking about, the videos last summer. What is it going to take to get above 262? And we're getting, and folks were getting a little bit too cute. Oh, maybe it's going to be NVIDIA earnings and talking about capital expenditures from all their clients and how much Microsoft's going to be spending on them annual, so on and so forth. It could never really, not let alone get it near the all-time highs or from the highs it had before of 283. It couldn't even break this box it was stuck in, this range, and we talked about it many times last summer. It was stuck from 235 to 260, stuck. And then we had that little bit of a rally. It was NVIDIA good news on January 22nd. It took it to 270, and then nothing really happened. And then February 24th was really where a massive sea change, and there was no Fed, February 24th or anything like that. Really just sentiment changed on SMH, confirmed, and then it was on its way to a 52-week low 2 weeks ago today, where it touched 170. So now what? It's had a nasty week. Semis have been the third worst place to be of the past week. It's been nat gas, the MAG 7, and then the semiconductors. So again, I do not think this is the place to be over the next 2 weeks. I think this is headed towards about, I have a 177 here for a calculation with room. I'm not confident, super positive that the 52-week low gets revisited. Also, just one thing to note here. The semiconductors has been, and this is scary to a point, was not oversold at all year until April 3rd. You got to recognize that there is a sentiment change. It's not just a AAII, bull bear sentiment. This is important. This is more so to me like almost looking at like a vol, smile, and skew to determine, almost a pattern of implied volatility. Once I see something become oversold for the first time in a year, and it used to be a superstar and a leader of the market, this is our quarterback, the semiconductors. My quarterback's Jalen Hurts, but the quarterback of the market is the semiconductors, right? This generation, this era's railroads. When that happened, as soon as it became oversold, everyone threw in the towel, asked questions later, oversold, 52-week low. Things happen very fast. Life comes at you fast, get a helmet. So I think this is headed towards about that 178 region. But again, just due to how fast things can move, I wouldn't be shocked if this goes and makes new 52-week lows. So wish I had better news with the video here today, but do not think we're in for a good 2 to 3 weeks in the S&P. The top 3 trades of the past 5 days, they've all been to the short side as well. When I was talking about being long Mexico, gold, and India, yeah, you crushed it from the long side. But in terms of absolute return, the top 3 trades of the past 5 days have been short natural gas. So congrats, Tony. You're absolutely crushing it on one of the best trades in the market. The best trade in the market, actually, in the past 5 days. Short Mag 7 is second, and then short semiconductors is third. Those are the top trades of the entire market in the past 5 days. And again, of the past year, it's still gold, China, Bitcoin. All right. So I'll be back later with another video, either tomorrow or Thursday. Peace.